What is up, ladies and gentlemen? Welcome back to the Dorian Show. Let's just jump into it, guys. Turns out I was right a couple of weeks ago. I think 2 weeks ago I was talking about Blackstone buying up all these rental properties, and people are no longer willing, are able to buy their own homes, and they are left just renting forever. I was saying like how because of the recession, there might be a chance that Blackstone may be forced to liquidate their assets at some point. They haven't done it yet, but I think they are going to start heading towards there. Right after I had my podcast last time, the news came out that Blackstone was limiting withdrawals from their REIT, their REIT fund, B REIT, Blackstone REIT fund, which is basically they let these accredited investors buy this fund where they just buy a bunch of assets like residential housing, commercial buildings to rent out to other people. So apparently they've always had this rule for their fund that they limit up to 5% of withdrawals a quarter. So and that's just to like protect the fund, right? So if a lot of people buy and they just let unlimited withdrawals, like that will lead to ruin really quickly, because once people go on a run on it, it'll just lead to more people going to the fund. So what's going on is like a lot of people online, I've been checking out the Reddit and the news and stuff. People are like, oh, you guys don't need to worry. It's not like they just made up this new rule. It was always a limit at 5%. That's true, but the concern is mostly because they are reaching the withdrawal limit, right? They've had the B REIT fund for this housing stuff for like over a couple years, and they were never close to meeting that limit. People were just putting in more and more money because they were returning like crazy numbers. I think it was like 13 for the past year, a return of 13%, which is really high. But now, because of the recession or the beginning of the recession, a lot of people are starting to pull their money out of the fund. That being said, like a lot of the investors that were pulling out of the fund were people from overseas, people that are in China in China, like things are going crazy right now. The lockdowns are still here, even though they're loosening it up. All these housing projects like are going basically bankrupt. So people are like going poor in China. So a lot of people are pulling out funds there. That being said, it doesn't mean there are no concerns. I think at some point in 2023, Blackstone's going to have to sell off some assets. The reason being is because we haven't even hit peak recession yet. Like you hear a lot of people in tech losing jobs. There are other companies out there that are starting to lay people off. I think Pepsi is laying off like a couple hundred people, which is not a lot, but there's going to be a trickle down effect. And when that happens, property prices are going to be worth less. So what happens with Blackstone and their asset is, I think like every year they would have to like reassess all their portfolio, the assets under the portfolio, right? Because they own all these houses and commercial buildings. The last time they did an assessment was in 2021 or early 2022, and the prices of these assets were worth way higher than they really are, right? Because of all the inflation. So I'm guessing in 2023 or even the end of this year, they would have to do a reassessment, and then the assets are going to come back low. And this is going to affect them in many ways, right? So part of how Blackstone makes money is they charge a fee to manage the property. So they charge like 2%. But then like if they had a portfolio of like 100 billion, like 2% of that is a lot. But like what if their assets come down to only 90 billion? And then of course they're going to lose money from managing these assets. And also at some point the building might not be worth what they bought it for, which I don't know if it's true because Blackstone has a lot of negotiating power. So in the event that their properties are worth less than what they bought it for, if they're underwater and they feel like whatever they're renting these out cannot what they're renting it out for is not worth having on their balance sheet, they'll have to they'll have to sell. Like they will sell at a loss, especially if they see a trajectory of it going down, right? So if they, let's say they bought a house for like just for whatever $100,000, and then they do an assessment, the house is only worth like $90,000, right? These are just numbers I'm making up. They might want to sell even at a loss because they could see the trend going down. They're like, it's better probably to sell at 90,000 than just hold it at until it hits like 80,000. Which is very likely, especially because private equity and like publicly traded companies like that, they don't really have you might think they have like a long-term horizon and they could hold through like the peaks and the dips and the valleys, but it's not true because they have shareholders. So what they need to do is like try to lose as little money as possible and try to make as much profit as possible, right? So if they first thing they need to do is like not lose money, and the second thing is try to make money. And investors are not going to like it if they see their portfolio just the worth of their portfolio just keeps going down and down and down, right? So they would have to sell, even though the smart thing for them to do is actually to probably hold through the next recession because they have the money to do it. What they should do is hold through it and buy even more properties when they're worth nothing, but it's going to be very hard for them to convince their investors. But then on our side, us regular people, I guess, like this is a really great opportunity for people that have money saved up to maybe buy some property if it ever comes down to your range level. Like for me, houses in California still needs to drop like 20% more to 30% for me to even be able to even consider buying something, because I'm poor, guys, because I'm poor. But I think there will be an opportunity in the next year, especially 2023. I think we're going to hit a pretty big recession. 2024 will be probably a good time to buy some property. But I mean, what do I know? I'm just recording this pod in my room, in my studio apartment. So what do I know? Nothing. I don't know shit. Right now, just along with the housing, I think housing is starting to dry up a little bit. Prices are already falling and staying on market for longer. However, there's still not a huge supply of housing. We're going to get there at some point, but until people lose their shirts and lose all their jobs, and if they're able to pay off their mortgage, no one's going to sell their homes. No one's going to want to trade a 2% mortgage rate and trade for like a 6% mortgage rate. That's insane. No one's going to do that. The only way they're going to sell is when people are caught with their pants down. You know what I mean? Like for those that are over leveraged, have like six homes and they only have like one income. So if they lose money from one house, they'll lose all their properties. Like those are the people that are going to be hit the most. These Airbnb investors will probably be hit, but none of that's going to happen until people start losing their jobs, which I'm not saying I want that to happen, but it probably will at some point. Inflation is still going to be high. At some point, the Fed's going to raise interest rates high enough where people will just have to lose their jobs and sell their homes. And I just don't think people are looking to invest in residential housing, at least right now. You know what I mean? Like I don't even know how if you were buying today, I don't even know how you would make money off renting it out. The mortgage rates are so high. Like you buy a home that last year, like your mortgage payments would be like $3,000, but because of the interest hikes, like now you'd be paying $6,000 for like the same home for the same price. But houses are more expensive now, and the mortgage rates are higher, so it's gonna be like, I'm like, how do you even make money like as a investor right now in real estate? I don't even know. Drop a comment if you could tell me how to make money in this climate. Even when it was good, like a lot of people don't make a lot of money off their rentals, right? Like a good spread would be a good return, I guess, is like a spread between like 6% to 12%. That's insanely low. Especially think about like only making 6% return a month on your rental apartment. You have to deal with like shitty tenants. neighbors. If you have someone manage your company, there's so many things you need to take care about. Take care, you know. You got to worry about a lot of stuff, and there's really no reason to even invest in for the everyday person to invest in real estate, rental property right now, especially because interest rates are so high. You're basically better off buying bonds or short-term Treasury bills, which is what I've been doing lately. I think Treasury bills right now are just like slightly under 4% a year. And what you could do is like you could just buy them short-term bills, right? So you could still have that cash. So what I would do is like I buy the shortest Treasury bills possible, which is 4 weeks. So you let the government borrow your money, and then 4 weeks later return your money back with a percentage, right? So it's actually not a lot because the annual APR is 4%. So if it's 4 weeks, you're only getting like a couple bucks, depending on how much money you put in. But over the long term, it's a really good investment, or even not even investment, but like a place to park your money, because it's basically risk free. The government always pays its bills. They're like the Lannisters. But yeah, so what I do, what I've been investing in the Tbills is I have a bunch of money. I spread it up into 4 groups, and because they expire every 4 weeks, I stagger them, right, or what they call a ladder. So I take like a quarter of my money. Let's say I will invest it in this week. I'll buy the bills this week, and I'll take another quarter of the money and I'll buy it next week, and then so forth and so forth. So that way I could just keep. I could basically get part of my money back in case like the market tanks enough and I need the liquidity to buy more stocks. So this way, every week I get like a quarter of my money back after 4 weeks, right? And if there's nothing to buy, I just roll over my 4 weeks to another 4 weeks. So every week I'll have liquidity, and then I'm also getting money for my money, which is a good way for everyone to use this strategy to, you know, like not lose a lot of money on your cash. You know what I mean? At least make a couple bucks on the cash you're holding, which is better than most banks. Actually, there's some high interest savings accounts out there that are pretty good, but they all tend to lag Treasury bills, which honestly I didn't even look into it for like 30 years of my life investing. I just started looking up like this past month, because I was like, dude, I have all this cash that I'm not spending because I don't want to put it all into the stock market right now, you know? So there's that. Treasury bills. It's a good place. I also wanted to talk about hold on. I'm gonna take a break right now. I just watched the UFC yesterday. I think it's 282 with Paddy the Baddy against Jared Gordon as the co-head, and then the other guy was who's the other guy? The big guy. So there's that Russian guy, UFC 280. I'm sorry for the lol. And Blakovic against Ankalev. This was a crazy card. It was a good card. But I just want to jump straight into Paddy the Baddy's fight. I don't even know how this guy. So this basically, if you guys didn't watch it, Paddy the Baddy was in a 3-round fight, and in my opinion, I think most opinion, he was getting dominated 3 rounds to 0, right? So the scorecard should be a 30-27. He didn't have a chance of winning, but for some reason it went to decision, and all 3 judges scored the fight for Paddy the Baddy. So Jared Gordon gets robbed. Paddy the Baddy wins the fight from decision, even though everybody, at least according to eye test, but I don't think he was even close. Like, he got destroyed. And my question is, like, I thought because of gambling, I think a lot of people are going to be really pissed. And like, isn't Vegas run by the mafia? Isn't the mafia like out there betting a bunch of money on the fights? You know what I mean? Like I wonder if these judges were bribed to basically let Paddy win. You know, you know what I mean? Like they're like, hey, I'll give you $20,000 if you score for Paddy the Baddy, and they probably didn't know it was going to be as close. So I don't know if they were bought off. And if they weren't bought off, like wouldn't a bunch of people, like billions of dollars, at least, I mean, I don't know billions, but like millions of dollars are being bet on this fight. And I'm just thinking about how many people are losing their money, right? Because they bet the underdog, Jared Gordon. It's just also kind of crazy how reputation switches super quick. I think this year, 2022, Paddy the Baddy was like one of the most exciting fighters coming out of the UFC. You know, he's a weird guy from Liverpool with crazy blonde hair, looking like a beetle. He's kind of a goofy kid. He likes to gain a ton of weight when he's not fighting. Like he has basically what people think like Conor McGregor or Sean O'Malley has. Like he has the it factor. He's a character. You know what I mean? Like people just rally behind him. But just in this week, I think his stock dropped a lot. I think he just became a villain in like a span of 5 days. The first thing he did was he basically had Dana White on his podcast, and he was just like, for lack of better words, he was like verbally sucking off Dana White. You know what I mean? He just went on this whole rant shitting on Ariel Helwani, who's I guess an MMA journalist. I mean, I don't really like this guy, but Paddy Baddy just looks real bad, saying like Helwani was like making money off of fighters, and Dana White is giving people what they deserve in the fighting world, which is crazy because some of these fighters are making shit, dude. You mean there are fighters like in the undercard that are making like $10,000 a fight, which is insane. Like $10,000 just to fight is not a lot of money if you think about it. Okay, people only fight like maybe once or twice a year, so you're telling me they can make like $20,000 a year, and that's including they have to pay their coaches and everything, their gym membership, and their agents, the managers if they have it. Like that's not a lot of money, man. And I get it. Like you could become a star and you could make money outside. Like Sean O'Malley and Paddy Baddy, like they make most of their money outside of the UFC, right? They gain their notoriety in fighting, but they make money off like their merch, on the podcast. Conor McGregor made a bunch of money fighting Mayweather, which he leveraged his infamy in UFC to get $100 million fight. And then he had the whole the whiskey brand. But the truth is, like, not a lot of people like have the backings of the fans, right? Like some people just like to fight, and they're just good at fighting. For example, like Michael Chandler, who just came to the UFC, like he's a good fighter, but like he's just not as bankable, right? Same thing with Henry Cejudo. Henry Cejudo, I think, is one of probably the best fighters the UFC has ever had, but like he's just not as popular as he should be. He's a gold medalist, 2-division champ. Like he should be making a ton of money, but he's just a smaller dude, you know. Like fans don't typically like smaller guys in the UFC, and his character is weird. Like I don't know, like and he's not making any money, but like Sean O'Malley and Paddy the Baddy is making way more money than he is, even though they haven't won anything yet, right? And I'm not saying that's fair or not. I'm just saying like maybe if you're like if you sell yourself well and you're a likable person, like don't shit on the rest of the 1,000 people roster in the UFC. But that being said, I if you guys don't know, you could actually own the UFC. Like you could buy stocks in the UFC. They're owned by Endeavor Group, I think, or Endeavor Entertainment, EDR, ticker symbol. So most of their, I think it's the business is between like 3 things, but it's mostly, they make most of their money through the UFC and also their management company. So I guess they manage like talent. They manage athletes, actors, and stuff like that. Kind of like I don't even know what these agent management agencies are called, but basically that's what they do. And I think currently right now, when they bought the UFC a couple of years ago, they bought the UFC for like $2 billion market cap. Not market cap. They bought it for $2 billion, not $1 million. Excuse me, $2 billion, which I think is probably a reasonable price. I think most NBA teams are probably worth like $3-4 billion now in 2022. Um, and I think the UFC is probably worth that, maybe a little less, maybe even a little more. Actually, I think the whole UFC is probably worth more than the average sports team, in my opinion. Especially like a shitty sports team like the Detroit Pistons or the LA Chargers. I don't know, but I think Dana White came out and said the team is the UFC brand is worth $10 billion. I don't know about that right now. I'm not too sure like where most of their money comes from. Of course, they have sponsorships, the rings, the sponsorships. They have pay-per-view. They got like a streaming contract with Disney at ESPN Plus, but the money is not that. There's not that much money in it right now. I think the streaming rights is probably less than $1 billion with Disney over 7 years. I don't really know. Pay-per-view, I'm not sure how much money they make off of pay-per-view, honestly. They sell out basically every event, but I don't know how much of that is really I don't know how much is our ticket sales make up like the revenue of a business. This is something I probably could look up or look into, which is a good way to kind of value the UFC. Anyway, what I'm trying to say is right now the market cap for Endeavor is about $6 billion. And I think they're saying that probably UFC is probably worth the 2 to 3 billion, and the other half is the management company. I don't know about managing talent. Like that is such a fickle business. I guess these talent agencies have like what they call like a monopoly, right? So I think kind of like with Ticketmaster and who's the owner of Ticketmaster? Live Nation. Like they have power because they manage so many music stars, rock stars and stuff. Like if people don't go through Ticketmaster, they're like, all right, then Taylor Swift's not going to perform here. So-and-so's not going to perform here. So they hold a lot of weight. So I'm guessing the management does have a moat. Like they have so much talent. They have probably really good directors and actresses that people probably won't leave and go to like a boutique management. I'm assuming unless you're like a huge star, like Ryan Reynolds, right? You could CAA, I think is one of the groups. But let's say you're Ryan Reynolds and you're managed by Endeavor, you might be able to just leave because you have the name. But like for most people that are just acting, they probably won't leave because they're like, okay, I have connections through this agency. But I don't know. I feel like like Hollywood is such I feel like it's so unstable. Like at any time someone could get canceled and your moneymaker could be dropped because they get canceled. Like if they're Kanye or something, they could get dropped by an agency. If they're a comedian and say something wrong, they could get dropped. And if they're making you guys a lot of money, like that could be a huge hit. And all it needs is like one scandal. What if like Endeavor has like a bunch of people just like sexual harassing people, and then the scandal breaks out and it turns out like 10 of their biggest actors are sexually harassing people, and it's all the executives are in it. Then overnight, that business is basically goes from 6 billion to zero billions or $0. So for me, I think when I'm looking at that, I think the most valuable asset they have is the UFC. But right now, I don't want to pay $6 billion for a UFC. You know what I mean? I don't think that's a fair price. I think maybe the UFC is worth like $3 billion. So, anyways, I feel I see an opportunity next year, in 2023, where I think the recession will be hit, and like smaller cap companies like Endeavor's going to be hit the most. When people are losing money, they always sell like the most speculative assets. So smaller cap stocks like that's going to get hit. If Google's going to get hit like 30% next year, Endeavor's going to get hit by like 50%, So I think maybe next year there's going to be an opportunity to buy Endeavor if it ever hits $3 billion market cap. I'm buying, guys. I am certainly buying. Anyway, this is about 25 minutes. It's a shorter shorter podcast. I do have more stuff to talk about, but I think I'm going to split it in half just because I don't want to make it too long, and I want people to actually watch this. I don't know. I don't know if people actually watch the whole thing, so maybe you'll get a little bit of what I'm going to talk about for the next one, guys. I'll talk to you guys later. Peace.